Welcome, everyone, to this week's bi-weekly community call. We've been holding these calls every other week on Tuesdays at 9 a.m. Eastern, 2 p.m. UTC. This will be the last call in 2022. On the agenda for today's call, I'm going to go over a couple governance proposals that are on the forum. One is regarding the deposit in M11 Credit's wETH lending pool on Maple Finance V2. The other one is a proposal for an independent review of the mutual's tokenomics, the premiums, and treasury management. And then we'll hear some updates. We'll hear Hugh's weekly update from the foundation. I'll do a review of the last week in cover sales, active coverage by cover type. I'll go over a little bit of information on our holiday break, and then I'll open things up for an open forum. So at that time, anybody can ask any questions or bring up anything that I haven't covered on this call. But I will jump right into things and get started going through these governance proposals. The first one is regarding the deposit in M11 Credit's wETH lending pool. We've gotten some updates from M11. The most recent update was on the Oros loans on the 11th of December. M11 had released a statement saying that all Oros loans had entered into arrears on chain and began incurring penalty interest. As of what we know now, based on these statements, they believe that they'll be able to recover a large majority of the assets for liquidity providers. So while things are still fluid there, it does sound like there is a potential high rate of recovery for the Oros loans. Still waiting for any updates. I haven't seen anything come through from M11 Credit this week, but if there are any updates on that, I will definitely share them here on Discord and on this thread. As far as the updates on the orthogonal loans, M11 did say that they entered all of these loans into default. They have a Medium post, which is included in the forum discussion about this as well. I have it linked there, but based on the graphic they shared and some of the info they shared, the percent loss for the wETH lending pool is estimated to be about 16.23%. One of the things that they are doing along with Maple is they're going to provide an airdrop of Maple tokens to lenders that's going to be distributed proportionally. They took a snapshot of this already, and based on their announcement, this should be executed sometime this week. I'm not sure on the exact date, but this is something that's in progress that they are working on. Based on this, they're still working on the Oros loans. The orthogonal loans is pretty clear that for the orthogonal trading loans, those loans are not going to be repaid, and they applied their first loss capital and will provide an airdrop of that. When I have more details on the airdrop, I'll let everybody know as well. Some of the updates for Maple Finance, they upgraded to their V2 that launched last week. One of the consequences was that the withdrawal period timeframes reset. To put members in the best possible position, the investment team started that withdrawal process again so that members would have some optionality on what they wanted to do. As part of this discussion that's ongoing on the forum and the snapshot vote that's live, which I'll cover on the next slide. With this withdrawal window in V2, losses are shared pro rata among all depositors in the lending pool. So it's a little bit of a fairer system. Each pool has their own withdrawal windows. So if you apply to withdraw capital, there is a certain cooldown period, and then there's a window to withdraw. The current window that we'll be eligible for is between the 21st and 23rd of December. The only amount of liquidity that we'll be able to withdraw is what is available in the pool at that time. Last I checked, which should still be active because no withdrawals have been active yet, is a little less than 1,500 wETH in that pool that would be available to withdraw. If this capital is withdrawn over time, it will take some time to withdraw all of the capital from the pool, because we can only withdraw the available liquidity in the pool. There's also info in the forum post and discussion about how the new withdrawal window system works in V2. So this discussion that's been happening on the forum is about how we proceed next, given that the loss from the orthogonal trading loans represents about 1.46% of the capital pool. How do we want to proceed with withdrawals? So the first question is, should we withdraw the funds and start that process? And the second question is, should we delegate the process of removing the deposit in the wETH pool to the investment team, or should we return to snapshot for each subsequent decision to withdraw and let members decide? Some of the factors to consider here are other things can still happen. There could be new developments with some of the existing loans that right now look to be healthy. We're still waiting on the outcome for Oros and some updates there. So the situation is still fairly fluid in the pool. So there might be decisions that we have to make where governance timeframes would be a little bit cumbersome to making some of these decisions. There's been active discussion on the forum for the people that have participated. It sounds like there's definitely sentiment to withdraw. Again, that's still up for a snapshot vote. But really the decision that most people will discuss is, should we delegate this responsibility to the DAO investment team, or should this be conducted incrementally as new developments arrive that members can decide on? So this has been transitioned to snapshot vote. This was transitioned yesterday. Because we're a little constrained on the timeframes, we want to have a decision within this withdrawal period so that if members decide they want to withdraw, that's something that we can initiate and withdraw if that is the outcome. But based on this discussion, there are three choices. Option one is to not withdraw anything. This is chosen, and the second decision really is decided there. So option two and option three are essentially yes, withdraw, but then how do we process the withdrawal? Option two is to withdraw and delegate the withdrawal process to the DAO investment team, and option three is withdraw and then return to snapshot votes for each individual decision. As of yesterday, when I took this screenshot here, the results show a pretty heavy weighting toward option two. So things can be done a little bit more reactively if there are new developments. And this is going to be open until tomorrow at 10 a.m. Eastern, or 10:15 a.m. Eastern, and I guess that should be 3:15 p.m. UTC. But I think this is something on the forum that people have discussed. If you have other thoughts, definitely review and comment on the forum and then participate in this vote. I think this is really important. This is something that we want to get done before the holidays roll around, and because this is somewhat time sensitive because of that withdrawal window coming up. We want that to be something that is decided so that we can take action on that before that withdrawal window closes. For those of you who aren't familiar with the new withdrawal window process, if you opt to withdraw and you have your deposit in the cooldown period and then you don't withdraw in that window, you can't withdraw the next period and would have to wait for the subsequent period after. So there is some penalty as far as when you can actually withdraw afterwards. There's just a little bit of a waiting period if you miss that withdrawal window. So this is something that I hope people discuss. Before I move on to the next forum proposal, I wanted to leave things open if anybody had any questions about this process or if they wanted to make any comments.
I'd just like to make a couple of comments on both the points. I guess I think it's become reasonably apparent, at least in my opinion, that the risk return profile of this Maple pool was basically not worth it versus just staking ETH. And yeah, I guess for several reasons, but and you never quite know these things until after the fact, perhaps. But I guess from my perspective, the other things that might not be apparent to members are the technical work that is required to do some of this off-chain stuff and get involved, and also like one interesting one is like an Oracle decision. Like if a loan's defaulted, but we think it's defaulted, but the period hasn't come up, then we don't actually have a true market value of the assets in the capital pool. And so, it's not necessarily an issue at this level, but the point being there are a few technical considerations for these types of assets that we didn't necessarily fully appreciate when we initially made the investment. And so I guess from my perspective, and this is a wider point, that I think we should revert back to full on-chain assets, more staking type derivatives like maybe Rocket Pool ETH or Stakewise ETH once they convert to one token, and those types of things that are kind of fully reflected on chain with Chainlink Oracle or equivalent security stuff. I think I don't think it makes sense for us to even if it is a small, higher risk portion of the capital pool, essentially kind of run the hedge fund on chain, because as a DAO, we're just not positioned to do that stuff. And things can move quickly, and the governance is not in a position to respond. So we need to be able to be in safer, comfortable, longer term type investments. And I think that's a reasonable learning out of this. And I think we've got out reasonably lightly, or hopefully we will get out reasonably lightly once it all kind of comes through. But I think once we've kind of made the decisions in specifically on Maple and the M11 credit pool, I think it's worthwhile kind of reassessing the investment philosophy in a bit more specific form in a document, so we kind of all get agreement on that type of approach. I mean, that's obviously my view. I know some of the other investment committee members hold a similar view. Others may not, but I think it's worthwhile going through that process. So that's one point. Excuse me. The second point is there are quite a lot of detailed considerations to come into effect with regard to how you actually process the withdrawal, assuming you do decide to withdraw. And so I'm very heavily in favour of the delegation. One example, which is it's borne out in the forum posts, is say we have an expected recovery rate on a particular loan, just as an example, say orthogonal was 20%. Then the problem is in the Maple system, you can either mark it as fully recoverable, 100%, or zero. It's a binary decision. And so if it's marked at zero, then actually the economically rational choice is to actually stay in the pool, because those who exit early take the losses at zero, and therefore there's more left in for the more high proportion of the recoveries will go to those that stay in the pool. And so those types of decisions are almost impossible to make as a DAO on a slow basis when things are moving quite quickly, and the withdrawal process depends on others' actions and who's withdrawing it, etc. So there's a little bit of game theory involved here, and that's really hard to do if you're a DAO. We're going to snapshot decisions each time. So anyway, those I guess from my perspective, very strong on the withdrawal. It's probably going to take us 3 to 6 months to fully get out of this, given liquidity has to come in as the loans close. So I'm strong on that, and quite strong on the option 2, as in delegate the process to the investment team.
Okay. Any other thoughts or comments? All right. If not, I will move on to the next proposal. Ronan McGovern has posted on the forum to gauge member support for an independent review of the mutual's tokenomics, of capital pool management, and then of the current pricing within the system. So he's outlined on the forum a few different factors, some questions that he had about managing capital. He refers to it as Treasury, but his specific questions are about assets in the capital pool, about pricing, and then his general comment about tokenomics is that it's impacted by certain things, but there's not really questions about tokenomics per se. Some of the parameters that he has is that if he were to do this, his goal would for this to be concise and to be completed by the end of January, to be interactive, where he would submit a review, get feedback, and then consolidate some of that feedback into a report that would be posted on the forum for members to consider. And then it would be something that would be additive to what we already have. There's been some discussion on the forum about this as well. Some people talking about some of the ongoing developments within the mutual. One of them is the Tokenomics Working Group, which, if you're not familiar with it, you can check out the Tokenomics Revamp channel down under the DAO Teams category. In there, Ray, who is the lead of that team, is working on a revamp of the tokenomics. He's provided quite a few updates over the last several months. There's plenty of information to review in that channel, and you can always reach out to Ray in that channel if you have other questions. As far as pricing goes, with V2, there is a change to the pricing model that the mutual uses. There's not a lot of detailed information out about this yet, but I'm currently working on the documentation. I'm hoping to have this ready to share sometime in January, but the actual date for the docs going live, I'm not 100% sure yet. So soon enough, we'll have some more information on how the pricing model in V2 works. For a little bit of context, it's a dynamic pricing model where we can have reactive pricing if risk changes and utilization starts to rise. And there are some other controls on pricing and capacity that allow us to better manage risk and to better capture revenue when exposure to any one risk increases. So there are changes coming to pricing. As far as managing the assets in the capital pool for capital pool investments, we do have the Dow investment team. I think some of the constraints there on the investment team are, one, ultimately any decision is up to members and goes through on-chain governance. But two, a lot of the capital pool investments that are made require engineering support from the team. We've had a relatively small engineering team for quite some time. There have been new people that have been hired to help scale up the team a bit to tackle some of the engineering work that is being done on V2 and things with V2. I'm sure he will share an update on that in his update, but are coming along, but there's definitely been a lot of work there. Because of that, some of the resources for investment considerations have been a bit constrained as well. So there is work being done on some of these things. I think those are some of the points that have been made on the forum as well, as about what kind of value this can provide. But I think the main points are if there is support for an independent review, I think that it's something worth discussing and something that members can share their thoughts on the forum. This likely won't transition to a snapshot vote until after the new year. I think at this point, this is more a request for comment than anything. So if you are in favor of this or if you are against this, share your thoughts on the forum. I don't know if anybody has any comments or anything that they'd like to share on this proposal on the call right now, but I'll leave some time if anybody wants to share any thoughts.
Yeah, I'll quickly just jump in here as well. I really value independent reviews of stuff that are going on and how the mutual works, because I think that's really critical. I don't, on this particular one, I don't think, given we know all of these issues and there are big changes coming through, I don't think this particular review at this point in time makes sense. But a review of an independent review of the new tokenomics, an independent review of the new pricing mechanism, and perhaps on capital pool management, as in what's the best way to, we know that there's a mismatch. We currently understand that there's a mismatch. We know that we need to get to a more matched position over time. And so what's the best route to do that? How long? How should you do it, etc.? That type of review, I think, makes some sense. So, so I think in general, the principle's fine. Some of the details and timing of this probably doesn't make the greatest sense right at this moment, given we're significantly changing two of the major parts.
Yeah, I think personally for me, I would definitely agree with what Huey shared. I think timing is the biggest thing. So once there's more information out about pricing, a little bit more information out about tokenomics when Ray gives the next update on this, and talking about some of these things once they're a little bit further along, that could be very valuable. But I think it's just more than anything, it's timing on this. But there's definitely going to be an open review period for this, so members should share any of their thoughts or comments on the forum as well. But this is all I have is in terms of reviewing these governance proposals. I think the snapshot one is very important. You can find the link to that in the thread for today's call. It's also in the announcements channel. I think everybody should review and vote on that because I think that's a very important one. But that is my review, so I'm going to hand things off to Hugh for his weekly update from the Foundation. Hugh?
Cool, thanks, Lee. Really, lots of stuff going on. As you can tell, I don't feel the greatest, but so I've been off for a little bit for the past week. But there's heaps of really good stuff going on. V2 audit has come back. a few points, but nothing major. Just a few relatively quick fixes that we're pushing through. And so basically the V2 launch is in sight. We'll come back with timing basically in the new year once we've planned things out a little bit. But the contracts are basically ready. You can see them on GitHub. They're open source. So apart from those small audit fixes and increasing the testing, that's kind of all there is on that side. The two biggest, there's probably three big classes of work to go from now. One is migration, and how we get the migration, like say how you migrate a V1 cover to a V2 cover, how you migrate stakes and all that type of thing. So we're kind of working through that. We've got an overall plan, and we know generally what to do, but there are a couple of decision points, and especially coding up the transition contract. So that's kind of in play. The second big bit of work is UI. Yes, it's UI is most of it's done and being reviewed. But the big outstanding one is the staking interface, and so we're going to be looking to release a basic version and look to iterate over time based on everyone's feedback. So that's the second bit of work, and then the third chunk or a third stream of work is kind of marketing and obviously comms and everything to everyone. So that's kind of what we're planning. I guess we'll get into more detail in January, but I guess the big news from my side is that the core work of the contracts is basically there, barring the few minor audit fixes. And so we're I think we're in a really good spot to kick off to finish the year and then kick off the new year with finish the final items to launch and then get to launch early. I think it's a really exciting position to be in. On other stuff, I guess we're doing some work around syndicate launches and those types of things, and talking to a lot of different people in the ecosystem about potentially running syndicates themselves. And so there's been a lot of like BD and sales work in relation to that. Obviously continuing progressing on the slashing coverage and having quite a lot of interesting conversations there from various different players, and that's kind of picked up a bit more over the last month or so with, I guess, different people have. It's interesting. It does wax and wane a bit, but we feel that people are more interested in staking yields now, especially, and I have heard a few times from people that the discussion about when withdrawals are going to be enabled that's a very positive impact. So I kind of feel that once we get withdrawals enabled on Ethereum, then staking, that's going to open up a lot more investors into the staking space, and should flow on into more slashing cover buys as well. So we're all kind of integrated into the wider ecosystem here. So lots of interesting conversations there. I guess the other thing is progressing quite well on a D&O coverage product in a few ways, and so I think that's going to be quite critical for the space to grow. And some of you may have seen my comments on the Maker Forum, maybe supporting their use, but basically think of it as legal expense coverage for either crypto companies that operate in the space, so like foundations or protocol teams or other people, other companies, and as well as individual DAO contributors. That one's a bit harder, but I think that would be really powerful, because if we're all to start contributing to Web3 DAOs, we open ourselves up to some legal exposures. So I think having some level of expense coverage there is going to help adoption more broadly within I guess crypto and Web3. So that really kind of excited about that. There's definitely more work to go on that stuff, but I honestly see that as potentially quite a big business line in the future, and something that I think we can provide to a whole bunch of crypto projects, DAOs, whatever. There's a lot of opportunity there, and there are very few providers in the current ecosystem. Whether I don't think there are any like DeFi products, but there's only like really one material provider in the traditional insurance space. So there's a lot of opportunity there. So yeah, that's I guess quite a few things, but exciting news with on the V2 front, and I think a good way to finish off the year from the foundation's point of view. But yeah, most of us will be taking a bit of a break over the Christmas New Year period, and but then we'll be back in full force to push V2 forward to launch. Yeah, happy to take questions, comments on anything.
Yeah, I have a question. So I've heard like part of like Binance has been willing to contribute like 2 billions on like Seifu fund and all, which is like to safeguard like any of the hacks or other stuff, like invest into the ecosystem. So Nexus Mutual already has the infrastructure and everything built together. So is there any plans to partner with Binance and all on that?
Well, there's nothing specifically there. I mean, it's a bit that type of stuff's a bit different, but there's definitely complementary. And I think one of the best ways that Nexus can potentially work with I guess Binance or any other like foundation or chain, etc., is if there is a pool of funds, then we can provide additional capital to those funds in return, so they can essentially increase the limits that they're willing to backstop, etc. So no, nothing specific on that, but there are definitely opportunities for us to get involved in if there seem to be value.
Got you. Thank you. Thanks.
Hi everyone. Do you still think we are on track to launch V2 before the FTX claims start to come in, or is that off the table?
That is hopefully on the table.
Cool.
That's what we are aiming for that. So we shall see.
Okay. Any other questions or comments? All right. If not, I will move on to the review of the last week in cover sales. You can find all of this data in the Nexus tracker, which you can also find linked in the thread for today's call. In the last week, the mutual sold about 13 million in cover and earned $87,882 in cover fees in the last week. Some of the largest covers that we sold were for GMX, Binance, Balancer, Uniswap V3, and Aura. The two largest ones, GMX and Binance, we earned considerable fees. These were longer term cover buys, but still seeing a lot of consistent cover buys come through. Some of the reoccurring cover buys that we have with Gelt, who purchased their bundle, and then we've seen continued cover buys for smaller ones, but for Liquidity and Euler and Ease as well. The DAI denomination and ETH denomination were a little bit closer to being balanced. So DAI denomination for cover sold was about 61%, and for ETH denomination about 39%. For fees earned, about 64 and about 36 on the ETH side. So solid cover buys last week. Because we're going to be on break, there won't be a newsletter next week, but just some insight into cover buys from yesterday. So we sold 27.63 million in cover just yesterday, and the cover fees that were earned were almost 56,000. So seeing a pretty large increase in cover buys here this week. Of note, Sherlock renewed their excess coverage, which covers 25% of the risk that they underwrite through their capital pool. But yeah, seeing consistent cover buys coming through again for Convex, Aave, V2, and Aura, and Uni V3. So definitely keep an eye out on those cover buys. There seem to be a lot of large ones coming through before the year ends. Pretty promising cover buys coming through in the last couple of weeks, and I think this is going to be another strong week of cover buys. Looking at the active coverage by cover type, all of this information is available on the Nexus tracker as well. But the total active cover is, as taken on the 19th, was about 144 million. Protocol cover, active coverage is about a 100.8 million. For custody cover, it's 25 million. Excess cover is 7.5. ETH staking cover is 6.8 million. And yield token cover is 2.5 million. We'll have a detailed breakdown of the exposure by cover product specifically in the newsletter this week, but just to give you an idea of what the active coverage by cover type is. An update on the community call schedule. So we'll be taking a holiday break. The Foundation and DAO teams will be off from the 23rd through the 2nd of January. During this time, we'll have limited availability to respond to questions on Discord and other social channels, but I'll be checking in from time to time. And when we come back, the next call is going to be on the 9th of January. So in the new year, we'll keep the bi-weekly call schedule. That seems to be working fairly well. And definitely, I hope everybody else definitely takes some time to enjoy their break and rest and recharge for the new year as well. But I wanted to open things up to anyone else who has any questions or wants to discuss anything that I haven't covered. If you have questions on something I have covered and you didn't have a chance to ask, feel free to ask any questions now, but the floor is yours if you'd like to speak. Okay. Well, if there are no comments, I can close out the call for today. Like I said, this is going to be the last call of 2022 before we go on break. We'll definitely return in the new year, but I hope everybody has a happy holiday season. I hope everyone gets to spend a little time away from the computer and can spend some time with family or friends and relax for a little bit after what has been, I think, a stressful few months in DeFi and crypto. Thank you for attending the call today. Thank you for the folks that join us pretty much every week and hear the updates within the mutual. I really appreciate it. I'm always happy to pass on those updates. So I hope everybody has a great rest of their day and a wonderful rest of their week and a happy holiday season. We will see you in 2023.